Since December 2021, we have seen interest rates in the UK rise 14 times as the Bank of England wrestled with the challenge of inflation. As a result, the Bank of England base rate went from a low of 0.1% on December 3rd, 2021 to 5.25% on August 3rd, 2023. Now, this has meant better rates for savers on the high street, but with news that the Bank of England base rate is set to be reduced, what do you do now?
The Bank of England base rate, or the bank rate as it's more commonly referred to, is the most important interest rate in the UK. It's set by the Bank of England's Monetary Policy Committee, which is essentially a team of 9 economists, and it serves as the benchmark for all of the interest rates across our financial system. It's significant for 2 main reasons. The first is that it dictates the cost of borrowing, so things like mortgages and loans, it will dictate those, and it also dictates the cost of interest rates for savers, and that's what we're going to be talking about in this video. But before we get into the mechanics of how this actually works, let's take a look at where we've been, where we are right now, what the Bank of England are thinking of doing, and how it can impact those 2 things, cost of borrowing and the rates that savers are due to receive. This is a snapshot of where we are currently and where we've come from when it comes to interest rates, and this is taken from the Bank of England website. And as you can see right here, if you look at interest rates historically, we can see that through this corridor right here, interest rates have been traditionally quite high. What we remember seeing in 2008, because of something called the financial crash, was a sharp decline in the Bank of England base rate and therefore interest rates to coincide with that. And ever since then, we've been in this environment of unnaturally low interest rates to the point where we saw the Bank of England base rate sub 1%. And that was good if you are borrowing money, but not necessarily good if you're a saver. And since we've been battling with inflation over the past 24 months, what has had to happen is we've had to see a sharp increase in the Bank of England base rate to where we are right now at 5.25%. Now, the reason for that was because of inflation.
But on June 19th of 2024, inflation in the UK hit the 2% target set by the Bank of England.
And so with this, there is a conversation that now we are due to see some kind of reduction in the Bank of England base rate. And we're going to start to see that fall, which potentially will impact the 2 things that the Bank of England base rate is there to benchmark: the cost of borrowing and the cost for savers. And that's what I want to talk about next in terms of the dynamics. What does that look like? So think about the bank rate as the white line here, and it's on kind of like a seesaw kind of like equilibrium. You're trying to balance this thing out, right? So as the Bank of England base rate moves, it's going to either lean left or right. And depending on what side of the spectrum you are, it's going to have an impact on you. So let's just say, for example, you are a borrower. So you're looking for mortgages, you're looking for loans, you want to borrow money. If interest rates are low, then that means that the cost of borrowing essentially becomes low. However, if you are a saver, so you have money in a savings account that you're trying to get to work as hard as possible for you, a low interest rate environment means that the interest rates available to you on the high street are also going to be low, which again, you think about trying to get some equilibrium between these 2 scenarios, a low interest rate environment tips things in the favor of those who are looking to borrow money. Now, this has been the case up until recently, until we started to see the Bank of England base rate increase to the 5.25 level that it is currently from being sub 1%. And what that has meant is that for borrowers, you've been used to borrowing money at low rates. Well, now the cost of borrowing is much, much higher. But for savers, you're also able to get a lot higher interest rates so that your money is working for you. So we've seen the things kind of swing in the favor of savers over the past 2 years. Now, this is where the conversation about interest rates being reduced potentially tips the scales back the other way. And to what extent, we don't know, because we're going to have to see where interest rates land. But this is what they're thinking about doing next. They're thinking about reducing the Bank of England base rate, which means that once this is reduced in 2024, what you're going to see is you're going to see a reduction here for savers. So it will offer lower rates to savers. And for businesses, for individuals looking to purchase a home or to borrow money, it means that the cost for borrowing is also going to come down. This is a very, very difficult balance to try and make. With that in mind, one of the things that you might want to consider is a savings account that offers a variable interest rate. And that's why I want to talk about Wealthify in today's video. They've just launched an instant access account, which is powered by ClearBank. But before we get there, let me just give you a rundown of the type of savings accounts that you might be able to use during times like this. So the first is a fixed rate or fixed term savings account. And with this, what you're doing is you're locking your money in for a fixed term. It might be a year, it might be two. And with that, you're going to have a known rate of return for that period of time. It's worthwhile noting with a fixed rate account or fixed term account, you won't have instant access to your money. And if you are able to get access to your money, you might have to pay a hefty penalty. The second type of account is a notice account, and it kind of does what it says on the tin. You've got to give 30 days, 60 days, 90 days notice, depending on what the terms and conditions are on the account. And typically you can tell by, it will say 30-day notice account. And with that kind of account, again, you're going to get a decent rate, but you need to give that notice or you pay a penalty. The third, which is what we're going to be talking about, is an instant access or easy access account, which is what Wealthify have essentially just launched. And with an instant access account, oftentimes it will have a variable interest rate. Now, a variable interest rate account is essentially designed to track the Bank of England base rate. And we've already established in this video, as of the time of recording, the bank rate is at 5.25%. Now, we think that there are likely going to be 2 interest rate reductions to the bank rate by the end of 2024. So let's just play a hypothetical here as a scenario. So let's just say in September this year, the Bank of England base rate goes from 5.25% to 5%. A variable interest rate account will essentially mirror what happens minus a small margin. Now that margin is typically there as it serves as a little bit of profit for the provider to set up the account, run the account, and do all of the due diligence and the daily running of that account. Now, having an instant access savings account can be really beneficial to your finances, particularly if you're trying to plan ahead or you need a reliable place for something like your emergency fund, for example, right? Because instant access means you haven't got to take on penalties if you need to access your money at a moment's notice. Things like house deposit. Fantastic place for that if you're trying to build an account for what you're going to get in the future, but you have a really, really short period of time, maybe a year before your house purchase. And having a variable interest rate also means that you'll be best positioned to have a competitive rate. It may not be the best rate on the market, but that's where it's really important for you to do your own research to make sure that the account that you are choosing suits your needs and your circumstances at any given time. Now, the instant access account with Wealthify, powered by ClearBank, you can open this account with £1. There are no maximums. It's really, really simple to do. And the account actually pays its interest on a monthly basis. So you see on a monthly basis how your money is actually growing, whether you're beating inflation or not. One thing that I do like about this account is the fact that it's not gimmicky at all. So a lot of other accounts will have introductory offers. So it might say that, you're going to get, say, 5.25%, but that's only valid for maybe 3 months. And then it drops down to a much, much lower interest rate after that 3-month period. And I've had people where they feel as though, well, they weren't actually aware of it all of a sudden, because sometimes you pay attention to the high number, you don't necessarily pay attention to the low number. And when that happens, it can be quite discouraging, disconcerting. With this, you know exactly what you're getting is going to be the interest rate advertised on the tin, and there it is. It's really, really simple. The other thing that I really like about this account is if you go onto the Wealthify website, you can actually put in how much you would put into your savings account, and it will tell you how much interest you would get over the course of a 12-month period with them. For me, I think that's really, really helpful, especially if you're in a position where you have a year towards your house purchase, you need a home for your home deposit, for example, and you're trying to get the money to work as hard as possible, and you're trying to work out, right, how much am I going to have for furniture, for example, right? Being able to pop in a number and know that this is the amount of interest that you're going to get can be really, really powerful in terms of helping you plan ahead in those kind of circumstances. So I'd encourage you, go and check this account out. I actually have an account with money in it. I opened it on the 18th of June. And the process was really, really simple. And I don't know why I would have thought it would be complicated, because it's Wealthify we're talking about here. I've been working with them for some time, and for the years that I've known and worked with them, they're all about keeping things simple. And boy, oh boy, the account opening process, literally you can have the account open in 5 minutes flat. The transfer is so easy. If you're transferring money over, you get notifications as and when it's happening. They guide you through it. It's really, really, really good. So look, not saying that this is going to be the best account for you. Far from it, but I do think that it's worthwhile you checking out and maybe doing a bit of research to see if it will fit your circumstances and what you want to achieve. It's a really, really good option. The process is really, really simple. And as always, you're going to get that protection of the Financial Services Compensation Scheme, that £85,000 protection that you get as standard. There will be a link in the description to this video that you can go and click on. Go and do your research, go do some reading, go check it out. Let me know what you think in the comment section down below. But I think in an environment where we know that interest rates are going to be going down through the rest of 2024 and into 2025, you know, savers haven't been here before. Well, they have, but it's been a long time ago that they were here, where you could have your money in a savings account and it actually beats inflation. So long may this continue. I hope that you found this video helpful. Thank you so much for watching and sticking with me. If you've not subscribed, please consider subscribing. If you've not smashed the like button, you know what to do. See you later.